Good morning and welcome to the Early Bird. Here we're looking at the Dow Jones on a daily chart, and we can see that we've had a strong rally through here, and we're looking now at this move down through here as wave 1 and this move here back as wave 2, pulling back to the 61.8 retracement level. However, all the retracement levels in the Dow Jones in other markets have been higher than the 61.8 retracement level. So when we look at the sort of levels here, that top bar there would be the 61.8 there. So you can see that in relation to this one, this moving above there, it sort of moved above up into the sort of 70 and 80% area there. So we should really expect that to happen in even this little sort of zone here, like this here. But you can see that this market that's moved, the market that's moved down through here, has really got good support off these old highs here. So really that's quite a bullish picture there, but we're just tracking the wave count to the downside, and we'll stay with that until proven otherwise. So if we take a closer look at this situation through here, and this would also be this is about the information coming out of the G20 as well. They want to ECB are cutting rates and shoring up the IMF war chest, so to speak. But it's a little bit sort of like buy the rumour, sell the fact. So we just, there's going to be spikes and all sorts of things that are going to be occurring up through here because they're all news events. But if we take a closer look at the situation here, this is the wave count that we're looking at. We're looking at this down for wave 1, an A and a B and a C back up for wave 2. Now, the 61.8 retracement level would be for this market, would be just around here somewhere from memory, but we can expect it to come higher. I kind of like the 12.1 up here because that's where the supply sort of starts in through here, so where the most orders were traded through there. So we need for this to play out. We don't have any evidence that wave 2 is complete and we'll be moving to the downside. So we really need to wait until the G20 unfolds in that thing, but they'll be involved in that today. So there's still more time required for this to top out here. So it's a bit tricky to go sort of long or short, and that's why we really haven't sort of put any sort of orders in the market there. The weekly flow of the markets would be having Thursday as a bear day and volume drying up in the afternoon. And if you see that volume drying up, that's kind of when you start to buy and look for support Friday morning with the volume coming in. And if Friday afternoon's got a strong close, well, then you'd move into that and look for the bull run on Monday. And, that's all quite possible with news coming out and so forth. But we'll just stay with the wave count and wait for the evidence to turn there, because we basically want to be looking at a wave 3 coming down. So our effort spent on just, it's okay to trade to the long side today, I guess, a bit like sort of yesterday, but sort of pretty slack out there. I don't see a lot of good setups on our local market to trade to the upside. There's a lot of weekly momentum to the downside that the market's got to fight to get through, to get to the upside, and you can see that there. Just drilling down a little bit further into all of this. All the markets are the same in their own little ways, I guess. This is the S&P 500 here, and so we're just reworking the wave count a little bit to suit this retracement level that we're looking at through here. So the A wave, the B wave, and the C wave up to that point. But this can also be the 5th wave down through here as well, which we can see when we're looking at the tech stocks. If I'm looking at the tech stocks here in the US here, you can see that this low was made lower from here. So we could count this as an down for 1, an A and a B and a C for wave 2, down for 3, back for 4, and down for 5. It's possible like that. And this would be the A, the B, and the C coming up through here. But whichever, this one didn't make a new low through here, but we had this in our local market as well, didn't we? in the small caps and the mid caps came down and made new lows. Not in this particular pattern, but on the daily chart going back a little bit. So, but anyway. We just need to allow this to track out through here. Once again, the S&P 500, the number that we'd be looking at through here would be the 1272. The supply levels start at the 65. That's the 61.8 retracement level there. But we know that the retracement levels are being broken, and we're moving into the sort of 70s, from the 60s to the 80s, let's say the 70s. So we could say 72% retracement levels, which would be about right. But also, in this structure through here, we can count to look for 5 waves in this structure coming up through here. So the 1, the 2, there's probably 3, 4, and 5 to come in through there. So we'd be looking at something in that range there, and then slowing down there, and then rolling over from there. So yeah, that's about sort of it, really. And be the same with the UK market as well, in terms of what's happening here as well. Nice strong move down, and the 3-wave counter trend moving back up. The 56 is normally quite a strong number, but it hasn't really been playing out through here that much. But we'll see how we go with it through here as well. But of course, this will just follow the other markets as well. DAX is the same as well. In our local market, on the SPY here, on this move down through here, we can look at this in 5 waves. We would be looking at it in terms of 1, 2, and the 3, and the 4, and the 5 here, making the new low here, and the A, the B, and the C wave up there. And the ABC there, if we're looking at a 61.8 retracement level, would bring that down to there, and it would be that top one there. So you can see the current price at the moment in those 2 top lines, retracement lines here, the 50%, and the top one is the 61.8%. So it's kind of in that 43 zone there. So the 43.30, the top of subgroup 1, would be an important figure to look at. But once again, is that, as mentioned here, the A, and then the ABC for the B wave, and then the C wave up through here would be something like the 1, the 2, the 3, the 4, and the 5. And there'll be 5 waves in this last structure here. So if we take a closer look at this move in here, we can see it a little bit like this here. So this is the A wave here, the A, the B, and the C to here, and then the 5 waves up. So it would be up for 1, back for 2, up for 3, back for 4, and we see wave 5 moving up through here. I haven't really pulled that apart through here, but let's just, on the close it can get a bit messy, and on the open it can get a bit messy as well. So this number here is going to be quite strong, even though it might not play out right here, right now. But the 4272, we're going to be seeing the market revisit this a few times. But if and ever that it swings across it a few times after it's gone up here and checked and done a few things, and if it becomes the retested resistance further down the track, that would be a very key turning point in the market, and also a shorting point as well. So we need to allow this structure here to play out to the upside, and yeah, we'll revisit this number, but just keep an eye on that as a key point to short later on. Right, the gold market seems to be following stock and be doing the same move to the upside. In the Elliott charts we're looking at the other day, we're looking at 1770 for that, but you know, the 1772 here, and just counting this little sort of structure up through here, it's pretty much up for 1, back for 2, the 3, the 4, and the 5 there. Maybe that's an A and a B and a C in there, I'm not sure. But the other thing too is that from these points here, this 3, 4 here, that could be the A, B, C in there. So we may even have up for 1 here, an A and a B and a C for wave 2 here, and then still another one to go up through here, because this would just be the 3rd wave. So it would be up for 1, back for 2, 5 waves up for the 3rd, the 4th, and the 5th there. But we'd kind of expect them to move with stock, and the inverse to that would be the US dollar, which we'll look at in a moment. And the oil markets, this is a this is a corrective pattern here, and we thought that may have been the fifth wave here in terms of the third here, third up there, and the fourth here, and the fifth here. But yesterday we changed it because we realized this is moving up here. So we had this A, B, and C here. Nice support on the 90 here. So we're expecting a new high to be taken out here, and we still expect that as well. And you can see those patterns on WPL and OSH and the like. So a new high should be made on those markets there. I can just have a look at that while we're here. I was just looking at OXH. So we're looking at up for 1 and back for 2 here. Nice strong third wave up through here, back for the fourth, and we're looking up for the fifth, making a new high here, maybe even covering that little gap up there. But gaps, have a look in the history of a stock, and to the degree it covers the gaps will be the degree that you can use it for there. The problem with this stock here is the medium level here at the 650 here, but technically it should make a new high here, but you know, we wouldn't go long under this here, even though it's a sort of a switch setup here. We wouldn't go long in front of that 650. They would have to have the 650 as support. Otherwise, you'll end up something like this here. So it's just, you just don't need to take the risk on there. And it's the same with the WPL here. You see the little 5-wave structure there, the 1, the 2, the 3, and the 4 here. Wave 2 was simple, wave 4 is complex, and moving to the upside there. The 3650 here is the important level here to move on from that point. And you know the 3772, the whole little subgroup 2 area in there, and you know 38 is a minor trading level, and the bids will definitely be hit at that point there, as they were here as well. So 8's profit taking, so that'll be done there as well. So yeah, look, oil should have another little push up there following stock a little bit higher, but we'll see how we go with that. Any high up here is fine. But the size of this correction here kind of tells me that it should actually push up much higher. It should really retest the 100 here. Richard Wyckoff's work in squaring time and price up there. I just normally look at the distance there and then apply that to apply the time to the price here to sort of square it up. But this is all looking a little bit dodgy here as well in terms of the structure here as well. So it's looking in 3 waves there as well. So we're getting a whole series of 3 waves across here. So all still very sort of corrective here. So it should be interesting there. The copper market here, there's a couple of ways to count this, so I just really want to keep it simple. While it's above the 350 there, then the base metals market or the commodities in Australia are basically supported. Below this 350 here, they're not. Yeah, so we'll just see how we go with that. We know where the resistance, there's plenty of resistance to the upside there, but let's allow the indices to unfold there. Once again, you can see a little structure in there. It's only 3 waves so far. We'll be looking to 5 there, so we'll be looking at an A and a B and a C coming back up through here. But let's just, there's too many options here. Let's just, while it's sitting above here, it's supported, and we'll leave it at that point there. The US dollar is the inverse to the other markets, and this is what we're basically looking at here. We're looking at this little 5-wave structure to the upside for wave 1, and we're looking for a little A, B, C there for the A wave. Now we're looking for got the B wave in place, and now we're looking for the C wave here. Now this C wave here is damn ugly, and there's something not quite sort of right about it. The normal case for this would be a 61.8 retracement level here to this point in here, where the supply is, the demand is over here, volume. So that's a possibility. The other one is the 7650 holding up as support in here as well. But this is sort of got the potential to to move down a bit further in this case. There's parts of it I understand. I'm just hoping that it's not down for one and back for two, and this is the third wave moving down. I can see it from this point here in terms of down for one and back for two here, and then down for one, back for two, three, four, and five down here. So that would bring it to this point here, but we need to bring in the 76.50 here. But this appears to be a larger correction here. The other way to look at this, if you're an Elliott person, is that yes, we do have the ABC to this point. Then this B wave could actually be over here, where we have an A and a B and a C wave for the B wave here, and then we're looking for a C wave in here, and the C wave would be in 5 waves in terms of the 1, the 2. Then we'll be looking down for 3, 4, and 5 to finish in here, and then move up from there. Now, the low in here is important because of the stocks, the indices, and also the euro as well. So on the euro, we'll be doing the mirror opposite. So while this is pushing down through here, we can look at the euro. The main thing here would be the same count as the indices here. So this move that we're looking at coming down here, we have to label this as wave 1, and we'll be looking at this. All of this is a corrective move now, and we need to look higher up here. The closest largest number is 140, so we need to bring that into to view there, and we'll count this structure coming up through here to complete it at this stage here. So as you can see here, that little move there could be wave 1 coming up, and then wave 2 coming back. So this would be the third wave coming in through here in 5 waves, the fourth and the fifth. So we're going to be pushing up above here. So if we go in here and have a little closer look at this structure in here, should do the trick here. So we can see that we've got this move up here as an impulse wave in 5 waves. You just got to work it out, the 1, the 2, the 3, the 4, and the 5. And then we've got the A, the B, and the C here. Nice setup, really, because then we can use the midpoint here, the 137.50, so it gets on there as support. So yeah, an impulse wave, then an ABC would allow you to say that top's going to be taken out, and you would be trading, stepping up through the sub-levels through here. This next move up through here, being the third wave, so to speak, would be up for 1, back for 2, up for 3, back for 4, and up for 5. And then we've got a corrective move here. This corrective move here, as wave 4 is still playing out, because wave 2 was simple, a zigzag in 3 waves, then wave 4 is likely to be complicated. So expect complicated, and once it's finished, it can push up from that point. But just allow this to this correction to complete through here. If I'm wrong, and then you would use the midpoint here, the 50, as a support. At the moment, it's resistance, isn't it? So you want it as support, a retested support. If you get that retested support, then you can look for higher ground to the upside there. Yeah. So, but that will be in line with stock. It's just a large chart there. The Australian market as well. We also have to, Australian dollar rather, we also have to look at this as the same as the Dow, the S&P 500, the FTSE, our SPY, cash market, all of that. We have to look at this as an impulse wave to the downside and a rally coming back up through here. Now, 5 is the second strongest number in the market after 1, so it's 1, 5, and 8 in that order as the strongest. This is also the midpoint as well between $1 and $1.10, because $1.10 is the first minor level. These are all sub-levels. So, but the 5 here would be the retesting shoulder point here as well. That would be the psychology going through there. Support on the 3 normally gets you to the 5. So taking a closer look at that, what's going on through there, we can see that the 5 waves down that would be looking at through here. The 61.8 retracement level is sort of is higher than the 5 here, and that's fine too, but we'd be looking at a 5-wave structure within this move here. And normally with ABC corrections, there's normally an equality relationship or a 61.8 relationship between the length of the A wave and the C wave that occurs there. But when we get to the 105 here, if we get that high, then this is where the supply begins and up to this point here, and that's the 60. So there's going to be a lot of resistance coming up through here. But our cash market as well, with its 5-wave structure going up, doesn't really allow this to go too far up from here. Just looking at on a smaller scale as well, that 3 waves up on the market here. So we could take the length of that and add it to there. We can see that this is a beginning, a middle, and an end to a trend, and we can see that coming into the closing here that that's getting a little bit tired through here. But look, basically we'd be looking, if we're counting this, we'd look this 5 waves up through here for wave 1 and back for wave 2, nice, simple and sharp. Then we've got the third, so if this is up for 1, this is back for 2, then we're looking at this is the 3rd wave, the longest and the strongest. And this one here would be the kind of fingerprint really for the structure here. But we've got up for 1 here and back for 2 here, in here somewhere, and then we've got the 1, the 2, the 3, the 4, and the 5. So that one there could be that one or that one. So there's going to be the 4th and then the 5th wave up through here. So once again on the close here, just to allow this to have a correction here, because you can see that this is the strongest part of the trend here, and now the trend is starting to creep because it's getting overlapping wave structures. The lows are overtaking the highs here, where it doesn't occur in the middle of the trend. So it's a creeping factor and a sign of weakness. So it needs to sort of rebalance and accumulate and mark up from that point. So allow it to come back and settle into here. As you know, that if a market finds support on top of subgroup 1, the 1, 2, and 3 here, then if it finds support on here, then that's a stepping stone for it to move higher, and psychologically it detaches from the closest largest number there, and that's the point of that there. So allow that there to unfold and then see if we can push higher. But if it does push higher, you'd be looking for a move like this here, the length of that, tacked on to the low of wherever that correction comes into through here. So you wouldn't be going too much higher through there, but when that correction finishes, then look for an ABC, then look for 5 waves up, but use the steps here. Normally we'll trade from the 104 to the 103 to the 30 here, the 104.30, and exit there. Like we do here, we'd try and get from here to here and exit, and then wait for the corrective process to unfold on top of group 1 here. This would be micro group 1 basically. Once support is on here, then you can move back in, trade to the 50, get out, wait for support and get back in, take some profit at 65, then take the rest at 72, then wait for 72 to become support, then build back in on there. So you're basically going for 9 points would be really great, but you'd probably end up with sort of 7. And you have a look at that money management plan in the Forex section. It's a great little money management plan where you always your job every day is to get those 9 points. It doesn't matter if you've got 1 contract or you've got like 500 contracts. It's about getting those 9 points every day. That's your mission, and it's a great financial plan for scalping. And if you can use that with the levels, then you're really on your way to getting something pretty consistent at that stage there. You just need to understand what is support, and that support there, that's coming back and checking. The breakout's important, but the retest is more important, especially when you see 5 waves there. So if we had a look at this one here, just while we're here, have a bit of a squizzy at this situation. It's that this is on 4 minutes. You could probably get it lower there, but so you can see a nice little impulse wave to there. Then you've got that, and then you've got the support there. So you'd be sort of interested when you sort of break out to the upside there. You know that 72 is there, and really you'd wait for support there, but you've got support on the midpoint. You can take some profit at the 65, keep the stop at an odd number like 47 under here. Don't put stops on 50 or 5. That's just crazy. Always at odd points. Not at 48 either, because all the orders will be at 48 and 50. So you need to be at 47, and then once you're through here, then that's fine, and build onto here. I would exit at this one here. I wouldn't worry about going through all of that. Take the money at the number, then you've got control, and you've got control of your emotions at that stage then. But if you're loose and allow yourself to go through things, then you're in strife then. So if you're trying to get through the 104 in that instance, you still need to keep the stop under the 72 here. Really, you need to keep it sort of at the 57 or the 63 minimum there to get through there. But anyway, alrighty. Well, that's it. A couple of wild cards out there with the G20. But the thing is that they will probably bring out good news. So being on that side of the market, if for any new trades today, would be the go. It's just making sure that you take some profits and lock in some profits before the end of the day, because the weekend is a long time when there's a lot of news firing around. So play a tight game until we've got a solid trend in line there. So, alrighty. Well, good morning and good luck.